take a look at Nigerians' fixed income and money market. Standing by at UBA to give us her perspective is Ramat Babah. That market, of course, will be reacting, Ramat, to the inflation numbers that were out earlier this week. Can you just talk us through how you see monetary authorities reacting to that news?
So the inflation news, you mean, Wole?
Yes, to the inflation numbers, yes.
The consumer price index fell to 9% in January as a result of the wear out of the reaction of the reduction in oil subsidy, which was earlier last year. You recall that there was also a hike in fuel prices, which had a ripple effect in all other areas. We've been seeing the consumer price index falling. In November, it was 12.3%, and in December, it was 12%. And now in January, it's currently at 9%, sorry. This reduction could be seen to mean that there has been very little activities, as most of the funds in the economy is geared towards savings. Most people are actually interested in just investing in government securities like the treasury bills. In my opinion, I believe the CBN might react to this by widening the plus or minus 2% corridor around the monetary policy rate in order to stimulate activities in the economy.
Oh, really? Okay, that's interesting perspective there. But okay, let's talk a bit about how the market has reacted to that news. We've seen the fixed income markets, particularly treasury bill yields, come down, I think about 100 basis points. Talk us through where they are trading right now.
The immediate reaction in the fixed income market when the news was released earlier in the week was a bullish trend, as we saw yields on some treasury bills maturities dropping below 10%. Also, at the primary auction of today, the stop rate was 10.54% for the 1 year treasury bills.
Right.
So we expect to continue to see a decline in yields across all the maturities.
Okay, and of course for the FX markets, of course we do have that auction earlier today. The naira has been fairly stable, given where oil prices are and given the supply that the central bank has been providing recently. Can you talk us through the auction results and what were the from what we're seeing, the central bank over the last increased its supply to the market?
Yeah, the central bank has increased supply to the market in the last few weeks. There has been a demand-supply equilibrium. In the auction of Monday, $120 million was sold at a stop rate of 155.74%. This has been relatively stable. Also, in the FX interbank market, the naira has been trading within a tight range of 157 figure and 157.50. However, on a daily basis, it averages a 20 kobo movement. We actually expect to continue seeing this, though since this is getting to the end of the month, we expect to see oil companies coming into the market to sell dollars, and we expect to see a shift in this. We expect to actually see a bit of activities as it's approaching month end.
What are your thoughts on where bond yields are likely to go from here? I mean, now we're seeing inflation below 10%. Some people are even calling that inflation may fall as low as 7%, although I would agree that that's not in the majority, but many people begin to think that that could happen. If we continue in this fashion, your thoughts on where we could see bond yields over the next few months?
Currently, the market is very liquid. Federal allocation funds of about 286 billion were released into the system on Monday, that's the 18th. The market traded overnight at about 10.25% levels. Yesterday, there were bond maturities of about 489.9 billion. Tomorrow, we expect 260 billion worth of treasury bills to mature into the system, even though there is also a primary auction. We expect liquidity to continue to be very high in the market, in the system, and as a result, we expect to continue to see decline in yields across all securities, both bonds, treasury bills, and also in the interbank money market. We expect rates to continue dropping unless the CBN, of course, comes to continue mopping up the liquidity through OMO auctions.
What about for the naira, though? Of course, we've seen it fairly stable recently, but one gets the sense that if oil prices remain at closer to $128 per barrel, we may actually see the naira appreciating. Do you share that view, or do you think that we're likely to see the naira where it is right now at about 157.30?
In my opinion, I believe the naira will remain stable for a while unless there is significant appreciation in the oil prices.